All right, everybody, welcome back to the discount. I hope you are all having a wonderful weekend. Last we jumped on here was about a week ago, and we broke down all of the major indices as usual. The S&P 500, the NASDAQ, the semiconductors, Russell 2000, and the majors in crypto, Bitcoin, and Ethereum. Where are we today, and where are we going this week, next month? And well, let's break it all down today with some common sense technical analysis. First up, the SPY. We're starting off on the daily chart here. If you are in our free Telegram channel, we are up about 70% on these puts. We took profit. We have about 25% left. And what we've been saying is we are getting that classic late summer into autumn pullback in the indices. We came up to that 786 retrace, could not stay above it. We gapped down here, and now we are finding some support. But is this just a bearish pattern to break lower into that 618 retrace at about 430, filling this gap closer to 420 on the SPY? And then I would love to see a spike of this trend line, this very important bull trend line. It is the extension trend line. Would love to see a spike of it to get long on the S&P 500 for the resumption of the bull trend, bull market. So let's clean this up. For now, we're still holding about 25% left of that put position, and we are still in an uptrending market. Now, we had a nasty breakdown candle here on Thursday, and we had Jerome Powell and the Federal Reserve presidents all meeting in Jackson Hole on Friday. And we had a nice reversal. It was a retracement of this breakdown candle. But so far, it has not gotten above this key area right here. It was a gap that was filled, and this gap came in at 442.46 on the SPY. What we need to see now, if the put position is going to be proven wrong on the remaining 25%, we want to see this area reclaimed and held for more upside, more downside. We get a double top type of situation, bust through this upsloping trend line I drew and down into, again, that 420 gap on the S&P, the SPY. And then here we will be judging whether to go long the spiders, or if we get some type of nasty breakdown and another bear flag pattern, will we be looking for more downside action? We will update everyone in the Telegram channel as to what we are going to be doing. For now, we are up healthily on those puts, so let's just sit tight and see what we get heading into September. Now, the QQQ, which is the proxy for the NASDAQ, same type of situation. We had this nasty reversal candle on the daily chart. If we get the full extension of the correction that we're expecting, we should see the NASDAQ down to that 50 retrace to fill this gap at about 331 spot 86, and then retest this breakout area. This is a huge supply zone. We want to see this potentially get tagged as well. That would be a lot of volatility. If we do a quick measurement here of that correction on the QQQ, that would be about a 18% correction. A little bit deeper than you'd like to expect from a normal correction in an uptrending market. For the NASDAQ, the QQQ, I think a regular correction would be about 5 to 15%. But let's see what we get. We're going to be eyeing longs again at these 50 retraces on the SPY and NASDAQ. Now, the bullish scenario, again, we want to see it reclaim this high, and it needs to stay above the 786 retrace in order to break out. This could very well happen, and we will be monitoring this actively. The semiconductors, this is our next put position that we are up healthily on. We are up about 50% on this position. Huge breakdown candle on the daily chart again. Is it going to try and climb this breakdown candle, hit the scene of the crime right here, which was the breakdown area, and then resume downtrend again? Or is it just going to head further south? I will be extremely surprised if the SMH and these markets don't come down and fill these gaps and hit these supply zones here. So we're hanging on to this. We have about 25% of that position as well left on the table for that extension move to the downside. All the same markets right now, guys. There's really nothing else to play on the major indices. Now, the Russell 2000 is my favorite market leading indicator. You know this if you've been following along. We said if it broke this upsloping trend line here, and now it's eating time off the clock in a bearish pattern, that we can expect this gap to be filled right here at about 175 spot 52. If it comes down and hits this gap and markets are correcting, I would love to see this be the rebound zone for the markets. Now, let's clean this up a bit. Could we see a scenario, right, where we are eating time off the clock, we come down, fill this gap, come a little bit lower. There's a gap as well down here at about 172. Spike this upsloping trend line like it did right here, right here, right here again. Do it one last time before the resumption of this market into a Santa Claus rally, into January. That is what we are looking for. So we cut our longs on the IWM. If you remember, we were up about 100% from this run, and we took profit perfectly here and here. And now we're waiting for a pullback to re-enter. Bigger picture on the IWM, the Russell, if this market wants to continue and we get some type of deviation and bottoming pattern again, I'd expect the Russell to get back to 221 spot 27. And that will be where our ultimate take profit target is for the IWM when we get long. If we get long, follow in the Telegram channel. It's free and we will notify you there. Now, one thing I want to bring up here is the US dollar index. If you remember, we were talking about how the US dollar was making this wedge pattern on the daily chart, and this was from the Telegram channel. It was making this wedge pattern and it broke down. Well, now we have a huge reversal and reclaim of this wedge pattern. I'd expect the dollar to get back to at least 106 on this run if markets are going to continue correcting, and then possibly a reversal back down and the dollar goes lower for the next few months into January. We will see where it goes. We are expecting the markets at this point in this bull trend to break all-time highs. So that means the dollar for the short term could be pretty whipsaw-y. It'll come up in this correction to 106. It'll come back down maybe to 99. We have some big levels on the US dollar that haven't been hit. And I think in a massive rally where we break all-time highs, the dollar could get back down to 96.72. At least. Now, I mention this because if you're subscribed on our website, the link to the website is in the description. We write a weekly macro newsletter, and this week we're talking about how the dollar strengthening in the short term will affect markets. Now, I want to be careful with this because, again, if the markets are going to break all-time highs, we're talking pretty macro here, a situation where we break all-time highs, or before that, we get in correction mode, get back to 106, maybe even spike it up to 108 before resuming downtrend as the markets are breaking all-time highs. Now, there are deflationary and recessionary pressures across the globe that we discuss in the newsletter, we discuss in our Telegram channel. And essentially, when we get those deflationary pressures come to fruition, the US dollar should go on a massive run. Now, is this just going to be the point, where the bull run is over and the dollar is just going to break out to all-time highs? Or is this going to be a false breakout scenario and we're going to resume downtrend till the presidential election, something around there, into 2024? 2024 is really where I'm expecting some type of reversal on the US dollar. If the bull trend is going to continue for the time being, maybe for the next 3, 6, 12 months, that should bring the US dollar lower, but ultimately the US dollar should see a massive run in a deflationary, recessionary environment. So we'll be updating everyone more on the US dollar and the current moves. This thing is a powerhouse, and everything it does is going to significantly impact the markets. All right, so next up, speaking of US dollar, look at the impact the US dollar had on Bitcoin. You remember, we were watching Bitcoin to potentially bounce off this trend line for the fourth time, and head off to new all-time highs. Well, that did not happen. It broke down significantly from this, and now we are eating time off the clock. In this pattern here, we are expecting some short-term rebound, potentially to 27.5 and 28,000 on Bitcoin before potentially resuming downtrend. Now, if you are actively trading Bitcoin right now, we are currently trading Bitcoin futures and Ethereum futures on Phemex. It is a US-friendly crypto trading platform, up to 100x leverage, which means you can deposit a small amount of money and get a lot of leverage in return. The link to Phemex is in the description. What's great about this platform is trading on Phemex is basically trading on TradingView. I know traders love TradingView. We love TradingView. So executing your trades basically within TradingView, but within Phemex, it is very user-friendly. So head on over here. The link is in the description if you're interested in trading crypto futures. And last but not least, if you are actively trading crypto, head on over to Coin Market Manager. It is the #1 automated journaling tool for crypto traders, actionable insights, and everything in between. You can automatically connect your exchange to Coin Market Manager. Head on over to coinmarketman.com. The link to Coin Market Manager is in the description. You can try it 14 days for free and 50% off all lifetime plans. Again, the link to Coin Market Manager is in the description. Let us know if you have any questions via Twitter DM or email. So Bitcoin again is obviously making a bearish pattern here on the daily chart, right? It is eating time off the clock in a classic pattern to break lower. That's the consensus. We took a small long trade here, and let's go down to the hourly chart to show what we did. Once it spiked here and it came into this important channel, it made a low. We were watching, and it spiked the low and closed above this low right here. We got long right there, put our stop at this low, and we profited and took profit right here. We're still in this trade. We have not stopped out, but what we really want to see on this is, again, a breakout to higher highs and hold and come back up for that take two profit at 27,500 and potentially even 28,000. Right now, it's a risk-free trade against the low. We already took profit up here. So nice trade so far on the Bitcoin long. But pulling back to the daily chart, again, the contrarian view here is it's going to break out and retest these higher levels. And who knows, we could even get a situation where it goes higher to retest the breakdown area where it broke down right here from that trend line. I think this is a tall order to get past 28,000 though, especially with indices looking as weak as they are and seasonality. The reason why we took the short on the indices is because of seasonality coupled with technical analysis, common sense technical analysis. It turned out to be a great trade so far, but now we are watching, we are in the pocket, we're taking some short-term trades for a little bit of upside, but nothing too crazy. The bear scenario again would be just eating time off the clock, can't push through, and we're gonna head much lower. The next significant spot we have on Bitcoin here coincides with this supply zone right here. It's at about 23,000 for argument's sake. If we're gonna get some more volatility again, I'd expect this level to come down, get hit. And if this level coincides with the same levels on the SPY that we're looking to go long, we're probably going to be looking for longs on Bitcoin as well for that Santa Claus rally, for that break of all-time highs for the year. So stay tuned on all of that in the Telegram channel. Ethereum, what I want to point out, something on Ethereum. Obviously, we had the catch-up trade scenario that just for right now is not the case. Now, could this break out, reclaim, this could be a fake out just like it was right here, reclaim this breakdown level, and we're off to the races again? Absolutely, that can happen. But for right now, I want to point out this measured move, right? You drew a measured move right here from the break of this trend line. It's kind of a head and shoulders type of pattern, not exactly perfect. But where this would take Ethereum in the downside scenario would be down to 1,272, give or take, a big breakout area and support breakout area, the big breakout area that got us into the bull trend in the first place. So I think it should come back down to this breakout area if we're going to see markets weak. This is going to be an area we will watch to potentially long. We'll watch the hourly chart, the 12-hour chart, and see what's going on down here. Is there a short scenario? Just not quite yet. There might be a scenario, right, where we come up, we retest this trend line, we retest this area, and we could pull a short trade up against the high here for that lower scenario where it comes down and tests that 1272 level. Absolutely. So we'll update everyone on that if the price action determines we should. So head on over to the Telegram channel. We called out that Bitcoin BART trade. We called out the correction coming. Everything in between, live day trading room, technical analysis, all for free, guys, here. I hope you have a great rest of your Sunday and have a great rest of your week.